Hi, this is Zach here with a weekend edition of the Bulletin Board Heroes here at Zach's Traders Cafe. It is Saturday, the 7th of October. Starting off with the FTSE 100, which obviously had not factored in events in the Middle East, but at least at that time, at the end of the week, we had supports around 73.70. Below that, there was a chance of rolling over to the floor of the falling trend channel from February as low as 71.80, and I suppose with the Middle East situation, that could be a possible trigger for it. Otherwise, an end-of-day close back above the 50-day line, still falling at 75.20, could take this market back to the 200-day moving average at 76.40, but I suppose that is the best that we can see at the moment. Moving on to the DAX, where the story was that the market was struggling with that rather obscure support line projection from back in May, 15,100. Above that, we were hoping for at least a retest of October resistance at 15,500, but again, that's the best we have been looking for. Below 15,100 obviously is the risk of a retest of old March support around 14,400 and then former November-December resistance in that area. Looking at the Dow now, and here some decent attempt there made to rally back towards the 200-day moving average, 33,800. Obviously the Middle East situation may change that. That's at least the line in the sand, I think, between being bullish and bearish at the moment. Above the 200-day line, looking for the 50-day line at 34,500, but again, that's the best we are expecting. We don't want to see a break back below 32,600 in the May support, because that really would make 2023 to date look rather nasty. On to Bitcoin, and here there were some signs of recovery, and there still are some signs of recovery actually, because we broke that line of resistance from July, 27,100, and we've stayed above that most of the time. Want to see a clearance of 28,000, which is basically post-August resistance on an end-of-day or a weekly close basis, and that would hopefully take us relatively quickly back up to 30,000, given that we fell from 30,000 relatively quickly, and you tend to see a push back from a sell-off in a similar manner to the drop in the first place. The support here, 26,400, and we want to stay above that. That's the uptrend line from back in January. RSI at 61, so in a relatively good place, not overcooked. It's all about breaking 28,000 at the moment. If we did break the January line, then we'd be looking at 22,000 at the floor of that broadening triangle from back in March. Just want to look at the AIM market, which is wins the prize of being the most horrible in the near term. You can see it's been a few weeks of hell for this market, all the way down really from back in March. We've had the 50-day moving averages resistance. Below that, there is, I suppose, not too much good stuff to look at. We've got the pandemic lows there around the 600 mark, just below that. And if we went any lower than that, which would be a bloodbath, then it would be a support line projection from back in 2016. That's actually a neckline that is pointing at 525, but let's hope that, let's say, we find support somewhere between 6 and 650. To be back at the pandemic lows would be, I think, a bit of a tragedy for that market. Moving along to the stocks, and obviously these by definition, a rather happier situation. Starting off with ARC Minerals, and here you can see that it looks like it'll be hopefully second time lucky for this market to break back above the 3.5 pence zone. That's been the lid on the market since back in June, 3.6 pence in fact. Obviously you could wait for that to be broken, but at least to end the week we had a gap close buy signals. We closed that gap from the end of last month, and above that level and the 50-day moving average around 2.8, 2.9 pence. We are looking for 3.6 pence to break and head up to as high as 4 pence by the end of next month. Onto a stock which doesn't get much coverage or following in many places, but it is actually a decent recovery chart here. Creo Medical, and nice enter with the week there, breaking above the 50-day moving average, which is now starting to rise at 33 pence. Above that, we're looking for 46 pence by the end of next month at the top of a rising trend channel from last December. You can also see, if you look closely, that the 200-day line's rising, so we are actually in a decent technical place for that particular stock. Corcel is next. Now it has a lot of fans, or gathered a lot of fans actually, after that big spike that there was back in September. What's interesting now is it looks as though we're in a mid-move consolidation within a narrowing triangle there, looking to break 0.47, I suppose, over the near term, and then head up to that target line there, actually, which is up to 0.8 as soon as the end of next month, or maybe a month after any break of that top of that converging triangle. But very interesting setup there. Looks like the slack has been taken up well, and especially while we're above 0.4, we're looking for the shares to break up to 0.8 pence. On to a stock which I think has been treated a little bit unfairly over the recent past, CleanTech Lithium, but it looks like it's seen the floor of that rising trend channel there from back in March at 45 pence. Obviously, we'd like to see the shares through the 50-day line, which has been a bit of a block over the last week or two. That's at 53 pence, and then hopefully we then, by the end of next month, head up towards the 70 pence, the long-awaited 70 pence area, which is, or was, resistance for the stock back in March. But at least we've had a bear trap reversal from below old July, August and September resistance, so the initial October resistance at 47 as well. So above 47, looking a bit better there for CleanTech. Stock which has had a bit of a rough ride over the recent past has been Echo Energy, and here it's interesting that we look to have bounced off the floor of a broadening triangle. That may have been around the 0.012 pence level. Initial target here up to 0.03, and then after that 0.05, but obviously very early days yet. The main plus point here actually is that the RSI went down to about 1 out of 100, which is about as oversold as you can get. If you're looking for another trigger, you want to see maybe the shares back above that old April support 0.02 before deciding that a bear trap has occurred and we're heading up towards 0.05. MyHealthChecked is next, and here you can see that we've made good progress above the floor of the gap there, around 10 pence, and then we had a nice rebound above the, at and above the 50-day line at 11 pence. Above 11 pence, we're looking for as high as 19 pence by the end of next month, on the basis that we've had a decent higher low, and we are filling that gap there down from the August peak around 16 pence. Next one is another obscure selection, Mycelx technology, and here we've got a rather simple rising trend channel that's been in place since December, top of the channel there at 90 pence, and we're looking for that while we remain, or the longer we remain, above recent 60 pence area support for this market. Metrobank is next, and what a situation this has been. It's amazing that having a banking license should be a license to print money, but at the moment it seems to be a license to lose money. It would have been nice if Metro closed above 48 pence, the top of that gap from earlier in the month. That would be the first buy signal to take the shares maybe up to the low 60s, but it looks like we'll have to wait a bit longer for that. But as I said, end of day close above 48, the first decent signal that you're not just catching a falling knife. On to one of the big rises of the summer, which has managed to bounce back above the 40 pence level. Probably went a bit lower than we were expecting, below 35. Ideally, we wanted 37, 38, but in current market conditions, you can't be fussy. Above 38 now, looking for a retest of 50 pence sometime later this month. Next situation is Serinus, which I presume not many people expect me to cover here. Looks like we've got a rising trend channel base there. Quite a long extended crawl above the floor of that channel, and also a nice end of the week above the 50-day line around 2.7 pence, above 2.7, looking for up to 5 pence by the end of next month. Obviously, if that happens, one would feel quite impressed with the charting signals. Next up is a stock which I always try and avoid, THG, but thought I'd give it a go here with the uptrend line there from back in December. We've had a double bounce off that for September and October, so basically the 65 pence area becoming support there. If you're cautious, you might want to see a second end of day close back above the 200-day moving average at 73 pence. That could lead the shares back to filling that gap up there at 86 pence, which is the prize. Even in a bearish situation, there can be rallies back to gaps, even if they don't hold on very long. The last few are left, and the first one is Upland, which I covered late last week, and seems to be doing well, bouncing off that sharply rising 50-day moving average, looking for 2.9 pence maybe now as soon as the end of this month, and hopefully much more after that, but you'll have to keep an eye on this slot to see what it could be. Valirx is next with its speeding ticket RNS. It's quite an achievement to get one of those in these current market conditions, and not quite sure why they have those, but anyway, more buyers than sellers, that sort of thing is probably the explanation. A nice support there above the 200-day moving average at 9 pence above that, but still looking for 17 or 18 pence by the end of next month, speeding ticket RNSs permitting. Finishing off with the last situation, which is a bullish one, a very nicely bullish one actually, but just basically a sideways to up price action there. Nice close above the sharply rising 50-day line for Windar Photonics at 37 pence on the 50-day line, looking for 50 pence as soon as the end of this month, or even sooner than that. That's it for me today. More updates during the week.